Does Dubai real estate market actually become less stable under rising regional pressure?
Well, the impact is exactly what you would expect. We have seen a decline in both the property prices across the city, in some areas more than others.
Or is the reaction we are seeing simply noise in capital behavior? Right now, Dubai is facing a shift in sentiment driven by higher geopolitical risk perception, which is making global investors slower, more selective, and more cautious in deploying capital. This is reflected in longer decision cycles and a more defensive approach to real estate allocation across international markets exposed to the region. As a result, some are questioning whether Dubai's momentum is weakening, while others are trying to distinguish short-term hesitation from structural change. To understand this properly, you have to ignore headlines and look at fundamentals: how capital moves, how demand holds, and how the city continues to function under pressure. If you're interested in understanding not just what is happening in the Dubai's real estate market, but why it's happening and how experienced investors interpret these conditions during geopolitical stress cycles, follow Arsenal East. We focus on real data, transaction volumes, pricing behavior, capital flows, not headlines. When people talk about safety, they usually mean it in emotional terms. It feels safe or it feels uncertain, it feels stable or unstable. But for investors, this approach doesn't really work. Safety is not a feeling, safety is a system. And when we talk about Dubai, we're not talking about a city that is simply safe in a general sense. We're talking about a city that operates within a very structured state framework, where stability is built into governance, infrastructure, and security systems. Dubai functions as part of a wider national structure where internal stability and protection of critical infrastructure are strategic priorities. At a regional level, the Gulf security architecture includes multi-layered air defense systems, including interception technologies such as the Patriot missile system, designed to protect airspace and strategic assets. This is part of broader risk environment investors evaluate when allocating capital to the region. And this matters more today because geopolitical risk premiums in the Middle East have increased compared to pre-2023 levels, affecting capital allocation decisions globally. However, despite this, Dubai itself remains structurally intact and fully operational. The next important layer is the actual condition of the city itself. Real estate markets are extremely sensitive not only to economic factors but also to physical stability. At the moment, Dubai continues to operate normally. There has been no physical disruption to infrastructure, no interruption of core systems, and no breakdown in the day-to-day functioning of the city. Tourism and mobility data support this stability. Dubai recorded over 17.1 million international visitors in 2023-2024, surpassing pre-pandemic highs and maintaining one of the strongest global tourism recoveries. This matters because real estate markets are fundamentally built on tourists, and trust is not created only by prices or returns. It's created by the perception that a city remains functional, predictable, and consistent in how it operates. Even in a high-risk regional environment, the operational continuity of Dubai is what maintains its attractiveness. What many people describe as correction today cannot be separated from the regional geopolitical environment. When uncertainty increases, real estate markets do not collapse instantly. They adjust through slower transactions, longer decision cycles, and more selective capital deployment. In Dubai, this is visible in a moderation of momentum after a very strong cycle. Between 2021 and 2024, residential prices in key Dubai segments increased by approximately 25 to 60%, depending on location and asset class, according to major market trackers such as Property Monitor and Knight Frank. At the same time, transaction volumes have remained historically strong. Dubai recorded over 120,000 to 140,000 real estate transactions annually in recent periods, according to Dubai Land Department data. This combination is important. Prices are stabilizing after strong growth, while liquidity remains active. The current phase is not a structural collapse but a repricing of risk combined with normalization after a strong expansion cycle. And the geopolitical backdrop is one of the reasons investor behavior has become more cautious. Another important aspect is demand. This is a tendency to focus on external sentiment and international capital flows, especially during geopolitical stress periods. But in reality, a large part of market stability comes from within the city itself. Dubai has a population of approximately 3.6 to 3.7 million residents, with steady annual growth driven by expat rates, business migration, and long-term relocation trends. This creates continuous structural demand for housing, rentals, and long-term residential occupancy. This demand is not speculative, it's lifestyle-driven and employment-driven. Even in periods of global uncertainty, this internal base remains active, which prevents the market from losing its core liquidity. The final point is about capital behavior. At the moment, most investors are not exiting the market. They are not aggressively expanding exposure either. They are recalibrating. This is a typical reaction in environments where geopolitical risk increases and global capital becomes more selective. What changes is not the presence of capital, but its speed. Decision-making becomes slower. Underwriting becomes stricter, entry points become more disciplined, but capital doesn't withdraw from markets where infrastructure is intact, legal frameworks are stable, and physical disruption is absent. And in the case of Dubai, those conditions still hold. If you are currently evaluating Dubai as an investment destination in this new macro environment, the key is not reacting to headlines, but understanding where value exists within the current risk cycle. On the Arsenal East website, you can leave a request and we will walk you through real-time opportunities based on actual market behavior, not assumptions or outdated narratives. So when you look at the market superficially, it can seem like uncertainty is increasing. And to be fair, regional geopolitical risk has increased, and that has affected sentiment and investor behavior. But when you look at the data, transaction volumes above 140,000 annually, population growth toward 3.7 million, and continued foreign capital inflows, the picture becomes more structured. Dubai is not isolated from regional risk, but it remains structurally stable within it, and that destination is what continues to define its position in global real estate capital flows.